Welcome back, master students. This is going to be the strategies scalping 2-1, and we have arrived now, guys, to our culminating week. I will say, team, that this has been quite the ride, and I am eternally thankful to have been part of it with you. Now, please don't feel like this is the last day here. Of course, it's not the last day, team. It's not the last day. It's not it. We're gonna do a review week next meeting here, right on Monday, same time, and we're also going to hand out the examination, right? So it's more of a, remember, guys, it's not, don't take it like it's gonna be like where I'm gonna murderize you, right, for failing. It's nothing like that. I just want to make sure that we are. That we're in play here, so that we can move on to the next step, and this can actually open up a bunch of different opportunities. Okay, you guys, what I'm going to teach here now, and also into executions, because actually recent conversations with some of the master students have led me into potentially wanting to open up kind of like a futures trading thing here, like in the immediate short term, like few days here type of thing, and to trade it with you guys, right? To trade it live with a specific team, and maybe set aside a different time from when it is that the traditional equities trade happens, right? So then we could also merge into that futures thing, and then have us execute together, right? So that kind of thing. But these are all just ideas that are being presented here as I explore, right? Because I've been receiving quite a few requests to try to kind of mentor the futures trade thing, and I think it's a good idea. I think it'd be cool, right? So just you guys let me know you guys just let me know how you're feeling about that, right? But everything would be big chillin', right? So okay, guys. So the last time we talked about the scalping strategy, we kind of went over it was still kind of a day trade. It wasn't really the scalp, and it was more to give you the potential bottoms and the potential tops, right, where the things can be kind of executed and realized. Well, for a scalping strategy, I'm quite literally speaking of something for the more, literally immediate short term, like tiny time frame. Right. So if we are talking about rejective levels, then I could show you something that tends to happen often. Right. So why don't we use something like, I know that the NQ has been incredibly it's been trending like crazy, right? So we could actually just use that too. So let's and it wouldn't be like anywhere, it wouldn't be anywhere in particular, right? It's just we need some type of zone. So like, for example, like even here, right? This could be something here. So we have confluent tops right here, right, team? This is a 4-hour time frame. You can see that price action on this candle, right, opened right here, continued upward all the way up to this area, right? And then it kind of did its thing until it closed at this valuation here, 21,793. There's not too much math behind that, or there's not too much confusion behind that either. The reason why I'm mentioning this is because you can see here that the following candle opened up very much where this candle closed right here. And it also made a move towards the upside where it resisted at a very, very, very similar zone. And then it retraced, of course, the 50% of the prior bar. So these things are things that we kind of already know, right, that price action tends to do, right? So, okay, why don't we go ahead and kind of highlight this area here like this, right? Or even we can actually just highlight it just like this here, right? Just like that. And what we're going to do is probably come down to maybe a 15-minute time frame, or an even smaller time frame. Okay, why don't we just go into like a 5-minute, because I know there's a lot of people here who relate to those time frames too. Okay, so this I wanna talk to you about. Let's see, how far did we go into that retrace? There we go. Okay, good deal. There, that's something that we can use. Okay, so check this out. Approaching the top, right? In the 5-minute time frame, if you put a trend line here, I want to show you this. Look carefully. We have a rejection right here, right? We come all the way down. Then we test that rejection again, comes all the way down. Reject again, all the way down. We still reject, even though the price goes into deeper zones. It rejects. So you're talking about let's see, 10, 15, 20, 25, 30, 35, 45 minutes of opportunity here, counter trend trading. So these would be rejective trades. So the average decline here would just be that of a 5-minute time frame. So your 5-minute time frame average, I guess we would pull up your stats, right? And let's see what it is. I think I actually got the wrong one there. There we go. Let me get data cells up. This is the original version of it. Okay, so 5-minute time frame is giving you an average true range of about $5.71 points, or 571, right? That would be 5 3/4 points from the NQ. So let's see. This would open at 780, and this goes up to about 788. So 780 to 788 it's roughly around the 571, $6. This was around $8, right? Good deal. So we can see here that we would retrace that same valuation too, right? In this case here, this thing opened up at 84 and it dropped all the way down to 72, right? So you can see that it deviates within that area. It's within there. So what I'm talking about here is this: if you're starting to notice that you're rejecting at these tops here, then you would set yourself into an area where you think you might be able to get yourself a position potentially short for an immediate short-term time frame opportunity. And I'm talking about a few seconds long, maybe even a minute or a 2-minute or even a 5-minute play at most, right, guys? So these opportunities here are the ones that I typically, myself, right, these guys know for a fact right now, guys, that these are not quantified. These are not moves that I'm actually putting mathematics behind, putting all this crazy, super brain, or like the way that I usually do. These are not it. These are just rejective plays. I get to scalp whatever I can, skim off that top and pull out right away, real quick. Discretionary, full-on raw dog. You know what I mean? As simple as it gets. And be out of the market. The reason why I'm out of the market so fast is because I lever hard into these positions and I lever out quickly, right, guys? I don't want to be exposed to the market this kind of pressure. Now, to put it into practice, I wanted to officially test that. I guess that you want to call it a strategy. We can. It's just the methodology behind it, and I wanted to test it today before I actually presented it to anyone, right? So I was able to do that, and I popped one account and did it on another one. So, and I realized my mistake that when you're doing it in futures, or when you're doing it in when you're doing it in any market, including futures, this is something that you would probably want to. My bro saying ARCa is futures trading god now. The reason why I'm saying this is because you can be singled out, right? If you are trading a small volatility. I need you to understand that the strategy, the scalping here, that scalping in general, guys, scalping works with volatility. So if the market is moving, that's when volatility is present. And that is when day traders are present. You guys are all able to see, we're all able to see the same play at exactly the same time. And we all take profits at roughly the same time. Hence, you can see the play, right? You can understand what the play is. Okay, so today, just to put it into a huge test, I put up a 100K account. It's already up for evaluation and everything, guys. But I was able to do what I'm just talking to you about, like this here, right? It was the span. I think it was 3 executions total today for a 100K account, and you have to meet $6,000 to pass the account. So in today's price, this is what I did over the span of 3 executions on this. So they were. I mean, you can only imagine here what it would take to like get this, get this massive gain here over the span of just fucking 20 minutes. You know what I mean? So they were quick. They were rejective plays. And the plays were roughly like 5, 6, 7 minutes long. The third one was my longest one. So just around there, 20 minutes around there, guys. So this is what I ended up doing here in the immediate short term and playing the rejective targets that I'm talking to you about right now. So what happens is that if you are testing this one time here and you're coming up to the second test and even the third test, well, those tests I'm actually going to try to maybe scale in, right, guys? And mind you, you cannot draw down a certain amount or else you'll be liquidated, right? You'll be pulled out of the position and you'll be kind of screwed. So this was a good test, and I'm going to do another 100K account just like it. I'm going to see if I can maybe do like 5 or whatever. So and then just trade them. So these are actually high conviction and high pressure plays. So they're not like they're not like so forgiving and safe. You know what I mean? They're very very aggressive. So your max position, I was trading the NQ. So your max position here would be 12 contracts of the NQ. And I am levering up to 10 contracts for these executions. And the reason why I blew up the first one, I didn't know that it was a live trailing drawdown. So my position I was already up $5,800 and something dollars, right? So at $5,800, I had kind of a wick to come down, and my profits came down to around 2,300. I'm like, oh, it's okay. This is just a temporary pullback. I'm going to be able to recover this. It'll come back. I'll be at the top again. When it reached $1,982, that was my drawdown, and they cut me out. So I blew it up. And I was like, whoa. Like I was thinking like, oh man, under take profit trader, that's called an end of day drawdown, right? So that was a little bit disappointing. So it took my account out, and I was already about to win it. I was already there at the $6,000 mark. You know what I mean? So it was to a surprise that it was live trailing. It was live, trailing. So if you made $3,000 on top, that means that if it went from 100,000 to 103,000, now it's 100,000 as your trailing drawdown area. It's no longer 97,000. You know what I mean? So that was the problem here. So now that I knew that, I was instantly in the game, right? So I kind of understood what that was, and now I just went ahead and played the retraces and played the rejection targets, 3 executions deep, and I was able to do this. So, but we're still within the parameters. We have to make sure that we don't draw down that hard. That's the difficult part here. So So I think that they have these brokers have coupons or whatever to be able to give you, they have coupons to give you these great discounts. But now I know the difference between an EOD, which is the end of day drawdown, versus the option 1 type of account where it just it's live drawdown. So that's how I exploded that first account. It drew down from the $6,000, $5,000 something dollars that I already had. It drew down $3,000 and it kicked me out even though I was up 2,000. It was terrible, right? So yeah, but the next one I knew, and that was it. I knew for a fact there that we were able to just simply be able to play that retrace, and it was okay from there, right, guys? So with that said, what I'm doing here is that we have the test 1 and test 2. So even when it comes up to a test 2 or test 3, I am this can be shares, this can be options contracts, this can be futures contracts, it can be anything, right, guys? But the thing is that we are playing this to execute from the immediate short-term time frame and execute out in the immediate short-term time frame as well, right? So everything would be taken care of here from the very point of execution, right? So it's going to be, you're not dealing with a long time of exposure here. Hence the scalp, the word, right? Hence that scalp word right within its right within its true context, right, guys? So yeah, I'm thinking that in the second time as we come up to that rejection level, and I'm not opening risk, even if it is that the 5-minute time frame has like a resistance at this point. So if we're trading this candle here, right, we're trading this candle upward, and it comes to this one here, sure, it can pull back, but it may not pull back further than this area here, because it would be like a 1-minute ATR range, and it would be equivalent to this area here. So I'm not shorting that, right? I'm not going against the grain on that. So in this case, while I'm noticing that we have 1, 2, 3 still failing, I'm probably going to go ahead and try the fourth one at this area here. So I know that it has a little bit of a pull to the upside, right? So we're just going to go ahead and make sure to get short the asset here and get a little bit of red here before it actually comes back down, because it's doing that here over and over and over, about an hour's worth of time in the 5-minute time frame, just doing it. Imagine watching that 1-hour candle doing that, or even the 4-hour candle just doing that. Retrace. You can't help but to notice that there's a pattern there. You can take advantage of every single time that has to offer, right? So you just take advantage of that scalp and be done with it, right? So you would really benefit even from making smaller gains, right? So these would be the true tests here. So you realize that this thing is following this one pattern while everybody's trying to chase the center of this whole thing here, getting trapped up, getting trapped down, getting trapped up, getting trapped down. I mean, how many times does that happen though? Like, right, the moment you enter, thing goes all the way down, right? And then for some freaking reason, you want to just get out because you're afraid, and then the thing just shoots all the way up once you get out. That's like such a typical thing that happens in price action, right, guys? It happens over and over again without give, right? Without give. So I ended up taking advantage of about 2 or 3 times of this happening, right? So I did a few times here for some smaller gains, like in the initial test, right? The one that exploded. I did a few of them that were around $500 to $900 each scalp. But then I realized that if it's really doing this here, but the problem is that we're in this like market where the things are just not stopping. So the first thing I noticed was breaking this area here, 21,788. I noticed that we broke it, tested, and we continued to the upside. The first thing I did was mark the area where it started to pull back all the way back down to that 21,780. This was my top side. So I'm like, okay, great. I bet you anything now this is going to be the area of support. It's going to come right back up all the way to this area here. So it did. So what I ended up doing, guys, was in this point, it dropped down to this area here, right? We got our top. It came back to test this bottom. I longed at the break of this area here, and I held it, right? 5, 10, 15 minutes worth from around here. We got the 5-minute confirmation. I just kind of held it here, guys. That was immediately a $2,000 shot, right? Huge. Just by breaking this area here, knowing that this would be a resistance again. Because it did it here. It resisted, new leg up. Resisted, came back down. Likely we're going to resist again, right? So I took advantage of that. Yet again, right? So from this point here, entered the market, right? Entered the market again and top ticked it, waited for this drawdown, waited for again the bounce from this area here, longed it again, for another maybe 5 or 10 minutes, and I was done. 1, 2 trades, $4,000 something. One trade up in here, another $2,300 and $2,400, and I was done. I met $6,240 in total, and that was my scalping day, using a 100K account. Right, guys? So that's the way I kind of play this. It's just by rejective targets. So I wasn't using the 5-minute time frame though. That's the thing. I was using a 4-hour. I was using a 4-hour time, and that's where I noticed that things just tend to bounce from, right? It just they happen to bounce from a certain area, and it usually happens it usually happens like that, right, guys? It just is what it is. It just is what it is, So yeah, so just know that this is a way to be able to observe price, and if you feel more comfortable to observe it within your immediate short term, then let it be, right? Let it be that you are more comfortable in a 5-minute time frame or a 1-hour time, whatever it is that gives you your magic. Just let that happen. So what if we actually go down to a really, really micro time frame? I want to show you a grid. I want to show you what futures really are. I want to show you what the building blocks of futures are. But in order for us to do that, we kind of need to go into an even smaller time frame. Let me go maybe even into like a 30-second time. Let me do even, okay. Here we go. Let's go down into an area where we're like flattened. I want to see, yeah, like something like this here. Okay. This is okay here. Let me go ahead and now open up. I think we can do it with Heikinashi. Can't, of course, it's not going to do it. Even the Heikinashis are not going to do it for me. Okay, hold on, team. I may have to do it on the ES because that one has been consolidating a lot. This has been going up, up, and up, and up, and up. Okay, yeah. The ES would be a lot easier for us to see. Even the 1 minute, yeah, even the 1 minute candles would do it. So check this out here, guys. Let's go to consolidation period and see what it's like. These are the building blocks of futures. So, let's go ahead and put this on a lock, right? Because any time that you it doesn't matter. Notice how all of these candles are the same size from this area to this area. Well, they're the same size because we're moving in a, let's see, 10-point move or less is enough for scalping, dude. Those moves were 2 points or 3 points on 10 contracts. They were huge price. They were tiny moves, yeah. And that's the rejective targets that we take advantage of, right? Immediate rejection, come back to the next confluence zone, pull out, and then do it again. So the third time, yeah, it's just you feel it though. You feel it. You can lever in lightly, and then when you feel the strength there, you can absolutely lever in harder and let that thing fall even deeper or rise even harder, right? And take advantage of that move and then pull out the profits while you're there, because riding the NQ, that's really, that thing really swings. So what I want to show you here, team, are literally the building blocks of futures, right? So you can see what price action looks like from the immediate short term, right? So everything is locking like this, right? Everything has a grid. It's all a grid. Now, if I'm able to kind of share it with you as that, then why don't I go ahead and do that, right? So let's do this, right? I'm going to put it, let me get some, you'll notice it right now. As we start moving up, you'll notice every single part of price action is linking to each other per the grid. These are things that I'm curious of, right? These are things that I personally look out for. I want to see it deeper. I pull it apart and I want to see it. I want to see it for what it really is. So noticing, notice it for yourself right here, right? You're noticing all this confluence here. You're noticing this perfect grid, and it's all within a bound, right? And then as you come back up to it again, they start latching into that grid again, right? So you can see that this is repetitive. It is completely redundant. It'll always be that. No matter what, it'll always be that. Right? Even if we were to scooch ourselves back into some random other time frame, right? You'll notice it there too. Let's go ahead and just zoom out just a little bit here. And even though that the candles are a little more volatile here, they're a lot bigger. They're still following within the grid basics. It doesn't ever pierce a line. Everything is per a line, you know? So even on this one right here, because you can see it kind of piercing, well, if we do that, then it links to this here. And if we do this one here, because that one's piercing out of there, then you're going to notice that to the left, it links right here. And it links right here. So this is your grid, right? This is how price action moves. So to understand it and to kind of see it for what it is, then it would be important for us to also break it down and understand. So what is it really though? What is it exactly that's happening? Well, I want you to take a look at what's happening from all the way down here. It's as simple as this. 60, 74, 74 and a quarter, 74 and a half, 74 and 3/4 whole. It's a quarter tick system. This would be quarter, half, 3/4 whole. Quarter, half, 3/4 whole. And this is why price action moves in the behavior of the grid that you see it in, right? It's because of that. That's the rule behind what futures are doing, right? So now we can see that, holy crap, you know, there's such an obvious pattern in here. We can actually quantify however many times it's within some area, right? But I'm doing this here to show you that there is some type of way to make this mathematical, but even still, I'm not utilizing the mathematics behind it. What I'm using is actually the behavior from it. I'm using its repetition, the iteration that it continues to repeat and repeat over and over and over. And it tends to be right within similar areas almost perfectly, almost all the time. Hydra's saying, do you use TradingView to trade? I'm used to TradingView to trade futures on paper. It's really easy to execute with backtest. Other platforms, I have no idea. Well, not all the brokers support TradingView, but if you're using Take Profit Trader, you can connect your Tradeovate to TradingView and execute there. For other brokers, it's like Rhythmic, Ninja Trader. There's a whole bunch of others, right? But yeah, I still trade everything. I still chart everything on TradingView nonetheless. Okay, guys. So remember here, team, that when we're talking about this immediate short-term time frame type of reaction or rejection play that we're kind of observing here, remember that I'm actually using these plays here to lever in hard for an immediate short-term take profit. I'm not levering hard so I can see how hard and how high I'm going to take the price action forever and ever and ever. That's a lot of people tend to, Ninja Trader does suck, dude. A lot of people tend to lever in as hard as they can to see how far up it can go. You can't do that as a day trader, right? You would be putting you're exposing too much of your account for too long. You know what I mean? So you have to try to keep, because remember that this game is about what you can keep, right? So if you're able to enter and lever hard for immediate plays and know for a fact that you were wrong on the call out for one of the plays, you know, if you are able to kind of know that, sorry, I said it wrong here, right? I kind of elaborated wrong. If you're able to kind of distinguish that or use that to your ability, that you know when you're wrong, that you are able to recognize that, you know what, this play was absolutely wrong, I'm not going to be able to benefit from it, then you should be the trader that would be able to take immediate action and close the position when you are wrong, right? So if you are that trader and if you do have that ability, and also I guess this would be that moment, right, when options famous video, how far can you what level are you going to fuck around and find out on, you know what I mean? But if you never ever try it, then you're just never ever going to be able to find out, right? I mean, it really is true. It really is true. So in this case, guys, I'm not using a profit factor of using one to a 2-to-1 R&R. I'm not doing like a 3. I'm not trying to get a 3R or something like that. I'm actually levering in. I'm putting at risk a lot here so that I can actually pull out from the immediate short term a greater amount. Now, what I will say is that as you grow your account into into your deep 5 figures, getting into your 6 figures, and eventually into your 7 figures, you are going to be able to risk less and less of your account to pull out, to siphon from the market the valuations that you're struggling so hard right now, right? So you're quite literally me. I'm speaking about me, right? I'm quite literally putting at risk here in uneducated amount of cash in order for me to just pull out from the market. But it's not me by myself. It's a scalping strategy. It's that you risk to the market what you believe in, a high conviction play. The high conviction play for a long term would be back tested, would be criteria added, fundamentals, catalyst, fucking statistics, all of that great stuff put together, long term hold, lever in hard. But since there isn't a back test, or since there isn't some type of catalyst backing this, since it is performed like in a 5-minute time frame, within the 5 minutes for maybe even a few seconds or even a few minutes, you're levering hard and getting out hard because you did not do the homework for it. So we have to know that as soon as price action has reached that take profit, we have to take it. We have to take it. But we're not going to do it unless we observe price to see how it's behaving around that area there. We have to look at it. We have to feel it. And if you can't feel it, use the 5-minute time frame, 3-minute time frame, whatever it is, to try to catch that pattern. Is it resisting at a certain place? Is it supporting at a certain place over and over? What is it looking like on volatility and momentum? Is it actually about to shift up? I don't use those things, guys. I don't use volatility or momentum. In fact, I'm not using even volume. I am simply using price action, raw price. That's all. So if we're able to agree with ourselves, psychologically speaking, that we are absolutely going to take a massive risk at this point. Well, what's your conviction? You know what I mean? How certain are you of a certain level, before you do whatever, you know what I mean? In that case, then, for example, in this zone here, we're resisting. All of these are 15-minute bars, by the way. This was so long of consolidation within this area here, presents an enormous amount of opportunity from 60.8150 down to the minimum of 60.80. So that's about a 1.5 right there. So in futures, 1 point gives you $50 per contract, and I'm doing 10 contracts. So what if I was able to hold a little bit longer, right? What if I was able to hold from this point, 60.8150 to 60.7925? Times 10 contracts. So what I'm saying here is that as you start entering, right, and trying to establish, you're trying to establish the resistance area and getting used to it, kind of consolidating there. You're noticing here that it's kind of flattening out. We're probably around the NYSE lunch. There's not too much volatility there. Well, that's in the first tests, you would probably, I personally would enter 5 contracts instead of the 10. Just in case price action goes completely against me immediately, and then I could actually just lever in hard, bring up my cost basis way up there for a really unsafe play and wait for it to just retrace at the level where I believe is going to come back from in some desperate attempt of trying to get this thing to figure out. Guys, I got to put it out there. It's the wild, wild west when it comes to scalping strategies. And this is the reason why I'm actually diving into it here with you guys. It's because it really is the wild, wild west out there, guys, with this with scalping. And if you're not sharp, if you're not savvy enough or I need, in Spanish you say trucha, tienes que ser trucha. You have to be, how do you say that? For some of my Spanish speakers in here, I know you got it, right? So when you're that, you just have to be, let's see, I think it's just sharp. Yeah, you gotta be sharp when something is gonna work against you, right? So it's like, yeah, you're looking left, you're looking right, but more like a boxer, right? More like a boxer or an MMA fighter, right? Where you can see the move. You can see the move coming at you before it comes at you just by the positioning of their feet. You can see everything. You can see everything. You can see the entire tailwind there leading straight towards this type of punch. So you're already ahead of the game and you're already ducking that punch. So you're sharp. You're ahead of it. You're ahead of the game. So that's what I mean. You have to kind of look forward here because price action is forward looking, guys. The price that we're seeing right now on the ES, on Tesla, that's a future valuation of where we think Tesla should be valued at. It is not a present price. It's a ghost. It's where we think it should be. So we're always chasing the should. So this is why I'm telling you that the strategy can work, but you have to know to look everywhere, look at every sign, know when you are, know where you are. Right? So, Torito, never heard that one, huh? Right? People just saying on top of way on top of the game. And Hydra's saying it's a different ball game. It really is, guys. It really is. Because at this is like in a gun game, this is a free for all. Right? So you go out there and you verse everyone. No one is in no one's team. Yeah, it is the big boys, wild, wild west, man. So yeah, if you could be keen or quick-witted, yeah, that's a good way to put it, Dollar Bill. Sure. If we're able to do that, and if we're able to correct ourselves on the fly, then we would be outstanding traders. But we have to make sure that we can identify when we're wrong. And if we're wrong, because we're talking about execution right away. We're talking about execution like instantly. Execution in and execution out, meaning that the point of exit, you should already kind of know where you're going to exit. And at the point of stop loss, you should already kind of know where you're going to stop out from if it is that you're running on a manual stop, meaning that you have your finger to stop you out. And now you should also know that it would be in your best interest to understand that if your finger fails you, then you have a fail safe to go. And you entered only five contracts. You still have 7 to go on man. I'm telling you that I made $6,240 in 20 minutes. The drawdown on this is $3,000. Any trade or collectively throughout the day. So you can see just how easy it is to stop out. The person playing against me that was shorting against me fucking got crushed. Got immediately eliminated. I don't even know where that person is. He's just gone. Right? But if you're not in sync with the market, then that's the result of that. And if you're levered in heavy, you can be instantly removed from the market, liquidated just in the blink of an eye. So what I'm telling you here, team, is that if there is no play, then there is no play. Let's try to, in my own personal strategy, right? My own personal way of observing things, wait for the macro top. Wait for the rejective play at the very tops, like this one here. Notice where it rejected from, right here. From that top. There is confluence. There's a lot of confluence when it comes to things like this. These bottom sides, they don't always work. Where you come back down and actually try to support right from down there. You guys already know what this means right here. Right? Remember the swimmer. This entire area here would be that water. Right? So as we dive in past this area, this is the water point right here, right? Right at the bottom of that green. We dive in. We can dive in as far as down there, right? And then come back up. So we have to know that the upside here, it becomes a little bit easier to pull down from. But remember that also, you have to also try to identify when the top could be. Use any trick available to you in the book to identify when that top can be. If you're not using your tools, if you're not using your quick-wittedness or wittedly, or your, I don't even know how to, you know what I mean. I don't even know if you can use the word in that way, but yeah, if you're not using your wit here, right? So then you'll probably, you'll get slammed up. Try to use every trick that you have in the book to identify higher probability resistances, and you'll see that, holy crap, it's rhyming there. So chances are, yeah. Witted giggly. Right, team? So this is kind of what I wanted to share with you guys, because there's no like official way to extract. I mean, there are trend trades, right? There are trend trades, guys. I'm not gonna. Okay, there are, right? There are. You can do the upside price action here, 5 minute, 3 minute time frame. Wait for the EMA 9 to cross above the EMA 21, right? Confirmation crossover above a major pivot point, crossover plus above pivot point, VWAP on top, or VWAP below us, we're long, right? Those are trend trades, right? Yeah, the option saying that he trades off the 9 and the 15, right? So there we go. There are crossover strategies that you can do too, RSI crosses, right? There are plenty of them that you can consider. Trend, you're talking about areas where you can go, I mean, incredible 100-point swings on this, right? So you can identify how it is that the moving averages cross over each other, where most of the traders that are trading those EMAs are going to react together, and then you react with them, and all of the EMA team bulls, they get on the long wagon, right? And you guys go, right? So there are plenty of ways to observe the markets, but I personally have found an edge from rejective targets. I personally have found an edge from resistances, from supports, rejections. Right? And I would need the rejection to be paired with something pretty significant, though. Like, for example, here, right? This zone here is paired with this resistance and this resistance here. So I need that to be something. Because to me, all we're doing here in reality is just facing this, let me put this on like a buy daily or something, right? We're facing a huge area of resistance, come back down, we come back up, resisting from here, came all the way back down, we pierced through it, we tested it, we're testing. What are we going to do? So I'm practicing here. I'm taking advantage of the rejection, and then the bounce. I'm taking advantage of all of those major points, down and up. You know what I mean? So that's one way to do it. That's my personal strategy. What's yours? So I'm hoping that I can shed some light into how some other trader is able to look at discretionary scalp trading. And if this is shedding some light into your ability, then by all means, try it and see how you can kind of form it. But know for a fact that these types of strategies, I'm taking very, very tiny, tiny price action into consideration here. The retraces from those rejections at top to come back down. I'm not waiting. I'm not waiting for the moonshot. I'm waiting for the consistent shot. Even if it is $300 or $400 at a time, it depends on how trending the market is, how volatile the market is. If the market is showing huge volatility and rejecting from those similar targets, then hell yes. Let's take advantage of that and really pull from the market, siphon from it as wide and as narrow as it can be. Right? So heads up on this, team. Okay, guys, this is a very, very, very speculative and very, very discretionary way of trading. But I want to show you and I want to display to you every which way that I personally practice, guys. I am constantly trying to sharpen my edge. I am constantly trying to become kind of a, I want to be a connoisseur of all of it. I want to try everything from the trade, because everything, I'm curious about the entire trade. I'm curious about all kinds of different strategies. Now, the strategy that I'm talking about right now, it might not be original. I think a lot of people are doing it. I'm calling it a rejective target or a rejective strategy because that's the way I'm observing it. So I'm giving you a name from it, but I'm not aware of anyone else who trades it like that. There might be. It's not reinventing the wheel, right? And today, I was also able to play the 4-hour and 8-hour retrace. That was in my first account that I blew. That was the big trade. That was the big one. Retraced right at lunch. And I was waiting for it, even though the things looked like it was about to pop up through the upside. I said, no, statistically speaking, 60 to 70% chances, it happened. You put your bet on the higher probability play. And if I'm talking about 60 to 70% chances of it, I'm levering in hard. And I levered in short 10 contracts. I didn't scale in. I didn't scale in 5. I didn't scale in nothing. I went straight 10 at the close. So it's not always going to work. It's 60 to 70, not 100%, guys. Okay? So this is just a further reminder, guys, that the executions class, guys, we're really set to start here in about a week and a half. So make sure to send that email over, guys. Get yourselves into the executions as soon as possible, so we can make sure to learn how to execute more than just it. This is just one, guys. Oh my goodness. A speculative one too. We have to design our executions further, sharpen our systems, and make sure to be the best that we can be. Okay, you guys. So this is it for the lecture today, guys. Please go ahead and post any questions that you may have. And yeah, but I appreciate you all. Remember, we're going to meet one more time. We're going to get the review week done next week, and then I'll be handing out the exam. But very good. And you guys are still hearing me, right? My voice is still coming through. Love it. I love it. I love it. I love it. Hydra. I'm going to remind you guys, like I did the other class, right? Remember, team, that the exam is not I told you guys earlier today, it's just it's more of a placement. I want to know where you guys are as we enter executions, right? So that I can kind of attenuate how the curriculum will be. I kind of have it ready already. And for those of you that are not aware, I am also presenting an options mini course here, a 6-week mentorship program for options. And I want to see about starting this literally within the next few days, maybe even on Sunday. Okay, you guys. So if you are interested in that, send me an email right over here and say, ARCa, I need to know more information on that. So let's see, setting limit orders ahead of time on this strategy. Yes, I am setting the limit order entry, mark it out. Because I want to try to bang out the most solid entry, because I'll get screwed on the bid and ask spread. I'll get, they'll give me the shitty end on the bid and ask if I don't do that. It'll likely be 50. It'll likely be 50 ticks. It won't be 25. It'll be like 50 deviated, and that's not cool. So yeah, team. Yeah, please. People were wondering about the other mentorship program. I know, guys, we have we have a bunch that we need to follow here, but I think that even for the beginners, the options, it's really for the beginners and options too. So it would work pretty well together as well. All right, you guys. So let's see. I've done enough market orders. Let's, test to notice that, of course. As soon as there's even a tiny bit of volatility, they pinch. Oh my goodness. Yep. You'll get screwed on that bid and ask, man. It's terrible. But yeah, guys, please go ahead and send me the email there if you are interested in that options mentorship. We're going to start this here I actually just put out a few emails to a few people, and just to kind of give you guys a little bit of highlight here. This is the acting syllabus for the beginner's guide. All right, guys. So we're gonna just demystifying options, right? So we have a lot to cover here over the span of about 6 weeks, team. So just know that I mean well, and I'm gonna cram your brains with some good stuff. And it's still gonna be for the beginners, even though I'm gonna give you all that information. So yeah, very, very good stuff, team. Let's see. What's your biggest gain on futures in one trade? Well, I didn't know that I was going to be limited. That I was going to be limited until now, because I'm trading that other broker. So I guess it would have been today. It was $5,900. And I know that I can go bigger. I just got to be sharper on my entry. When the emails for executions going out, they should be going out this week, officially for everyone. You're talking about the welcome packages. Let's see. If we are taking executions and psychology, would you recommend we do options at the same time or wait until the next round? Oh my goodness. It was supposed to be meant to be taken almost even. It's supposed to be 6 weeks long, and I'm wondering if I can cram it so I can make it 5 weeks. But it's just because some of the weeks are really small. Like, for example, the week number 5, the reading options chain here. What is the options chain? Strike prices, premiums, expiration dates, how to read and interpret the data, spotting in the money or out of the money or at the money options. This is not long at all. So I feel like week 5, I can easily bring in the risk assessment here for options. So this is why I'm saying that maybe considering taking it all kind of at once and then having options end quickly. It would be ideal, because this would also lead to executions. Like you would be learning how to execute options too, because I'm going to be covering that. I'm going to be covering how to execute and risk manage the options versus shares and versus market cap versus catalyst versus, oh my goodness, there's just so many ways of doing this. But yeah. Let's see. Thank you, my brother. Thank you so much. Any questions, you guys? You please go ahead and post them up here. And we're gonna be. Oh yeah, we got a market prep. We got a market prep. Oh yeah. Oh, good times indeed, team. Oh yeah, very, 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 very cool stuff here, guys. So yeah, there is a possibility here that the 6-week mentorship could be 5 or 4 weeks for the options. Let's see. I'm working from 8 to 5 most of the time when ARCa does the market prep. I said to limit to fill my order. Damn it, Destiny, you're just over there catching money from every which way. I want to be just like you when I grow up. I am your biggest fan. Destiny, yeah. But let's see. Ripe saying my job is awesome. They know I chart at work. That is pretty cool, man. I gotta admit. I must admit, that is pretty cool. I love it. I love it. I love it, man. Very interesting indeed, brother. So yeah, if we are done with the questions here, team, let's go ahead and close up shop. Let's get over to the ARCa Bulls side and get ourselves rolling with a market prep, right? And it looks like we've been recording here pretty nicely, as you can see. Right, go ahead, buddy. Did you eat any dude? Yeah, I had to actually today. I did. I feel a little guilty about it too. It's just because I had to take my son to. I didn't have to. It's just I decided to take him to like buffets because I have such a hard time getting him to eat. So I want to introduce him to just a whole bunch of food, a plethora of food everywhere. And I'll be like, dig in, son. So I took him, right? And I obviously I have to eat with him, so he has to see me eat the freaking crap so he can eat the freaking crap. Right? But I did start off with a salad and he was just looking at it like, I don't know about that. And I was like, oh, okay, let's go get the tacos. So that's how it went, team. Brain food. Thanks, man. Thanks, man. All right, you guys. So let's close up shop. Let's do our little dance. I'm gonna go ahead and stop the stream over here for YouTube, and it is now over.